Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to show the other side of trading. I believe trading goes in cycles where we have good, the bad, the ugly. If you guys remember some old 1970s spaghetti westerns, and I think more vendors ought to show days that are a bit ugly, in other words, days that are frustrating. In other words, rather than just show good, perfect winning trades. So that's what I want to do into MTPredictor's video today. But before we start that, we have to go through our risk disclaimer. Just to remind you, all examples in these videos should be considered as hypothetical. No trades were actually taken. They're just shown for illustration and training purposes only. Also, there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, and more importantly accept, that losses can and will and do occur. All trade decisions are your own sole responsibility. Right, yesterday was Tuesday the 15th of August. So I want to have a look at the USE minis and show you how sometimes you can just get a very, very frustrating day. And I'm actually picking the worst day for frustration out of the E-minis yesterday. Again, rather than trying to show the best, I want to show how markets really unfold in the real world. This is the NQ which we'll be looking at, and looking at some of our setups here. But if we look at the ES, the ES was a relatively sort of flat day. The only real trade was our VS buy setup there on a black MTP trend, and as you can see, the market never really went anywhere. It went sideways. If we look at the YM, again, also a frustrating day. There was a nice Holy Grail buy setup there, but it was often a red MTP trend color-coded indicator, so you probably would have avoided that. So I just want to go to what would have been the most frustrating day again, because I want to show you this, that markets do unfold like this in real life. There's not every day isn't perfect. Markets go in cycles. There are about half the time you'll get nice, clear, clean patterns of which you can get some good tradable setups. About half the time the markets will be chopping sideways, going nowhere, or just be frustrating and will probably resulting in small losing trades. So that's what I call the cyclical nature of trading. So today I just wanted to show you, we'll call it the bad or the ugly side of trading, with a look at some setups we had yesterday. If we look at our MTP trend, it was basically red stroke black pretty much all day, so the trend was either down or flat throughout the whole day. Our first trade setup came in here, which would have been a Holy Grail sell setup. You probably would have been taken in and then just clipped out, and that would have been a -1 loss. Remember, losses can and will and do happen. This is why I wanted to show this, to show that losses can and will and do happen. The trick is using our position sizing. Here we're risking less than 2% of a sample $20,000 account, so that would have been shorting 7 contracts. So that would have been a 1R loss. We then come back straight away again. There was another trade setup there. And as you can see, if I zoom this out, the market never got to its target. In fact, the only place it got to was basically about a 2.4R profit, just as the market came down here. It didn't even get to the DP from the wave B low, which is normally an area where we anticipate support. So at the very least, you'd probably have had your stop to break even on this, particularly as it was starting to go with you quite nicely. So that would probably been a break-even trade. Let's now have a look at this next sell setup, again with our MTP trend. This was a DP sell again. The market got ever so close to its target. If it had done, that would have been a nice 6.2R. And in fact, actually, you were sitting on just over 5R profit at that particular point in time. But as you can see, the market never got down to the target. So at the very least, you'd have had your stop at break even, which had been very frustrating to watch a 5R profit disappear like that. Maybe you'd have used the ATR stop, which is our red dots there. So if you use the ATR stop, you'd have come out with a plus 1.7R profit. So that might have been a good thing to do yesterday, particularly as the day so far had been very frustrating and chopping and sideways. If you'd come out there with a plus 1.7R profit, you'd have probably come in on this short trade again here, which would have been a losing trade again. Remember, losses can and will and do happen. I told you this was going to be a frustrating day, and this is the way markets unfold sometimes. It's important to show these days and understand that no matter what system or approach you do, the markets will have days when they are just plain frustrating. So this one would have come down, not even got to the 100% initial risk level, so that could have been another -1R loss. So far you'd be -1, break even, plus 1.7, -1. Let's come down to just before the close. There would have been another VS sell setup here. Market never got down to its first target, but if you'd come out on close, which is about there, again another plus 1.7R. 1.7R. So as you can see, a very, very frustrating day where you've had 2 profits, 2 losses, and a break-even trade with the market basically going sideways. But if we add these up, so -1 plus 1.7 -1 plus, whoops, let's do that right. So there's two 1.7R profits, that's 3.4R, and then 2 -1R losses, that's -2. So actually overall it could have been a plus 1.4R day, or a small profitable day. So even though it was a very frustrating day, because we managed to keep our losses small, that allowed us to then keep in the game and keep on trading, and allowed us to make some profits that were larger than the losses, albeit small profits. So it could have been basically a small profitable day, or basically a break-even day. But I wanted just to show this, just to show all you guys out there that there are days when the markets are just plain frustrating. I mean, the previous day was pretty much the same as well, where the market just basically chopped sideways after making a gap up. So that would have been a very, very frustrating day there as well. So 2 frustrating days. Remember, markets go in cycles. So after a couple of frustrating days or hard days, we're probably due to come around to the good part of the cycle, where we'll get some good MTPredictor trade setups unfold. But this is the hard part of trading. It's what most people find difficult, is going through days when the markets basically aren't playing ball and basically chopping sideways. So I wanted, again, as I said earlier on, I wanted to do this video just to show you that markets do go in cycles, and just to show you that there are days when the markets are hard and quite frustrating, and sometimes it's quite hard work just to keep your head above water on those days. But that's what you must do on days like this. Keep your losses small, so then you're ready for when you have the good profitable days when they come through, which they will do as the markets go in cycles.